Welcome back, Chris. So what is the one stock that you are buying on the dips?
Well, I'll say this. I think this market has given us clues about where leadership is going, and that's the area I want to concentrate on. It's defense. And when I look at names like Lockheed Martin or Raytheon, those are your leaders in this tape. So if we talk about a name like Lockheed in particular, the stock's up 30 or 40% off the lows. It's been consolidating for the last several months, but it's consolidating in an uptrend against a sea of downtrend. So this is a leader in a tough tape. There's so much good support in that 420, 430 range, where I think viewers have to be looking to this as a buyable decline in a name that is a leadership stock in a leadership group. We think ultimately this goes on and makes new highs here.
It does fundamentally make sense, Chris. And we know that Europe, for instance, is really ramping up its military spending for the first time in years, places like Germany in response to Ukraine. Why hasn't this stock and others been acting stronger?
Well, I think in the context of the year, this name and this entire group has acted great. And, when you look at the leadership that's come from the defense contractors, it's telling us that this conflict in Russia and Ukraine lasts longer than the consensus expects. It's giving us the same message that, say, the energy stocks or oil here is. So this idea of peak conflict or peak inflation or peak yields, I don't think the market is justifying any of those. And these defense contractors, as your leaders here, I think support that view.
So you like Lockheed and defense names like Raytheon, but not the overall market. Why are you not convinced that the bounce could go on for longer?
I think when you look at the quality of this rally, the internals have been decent, not exceptional. We're looking for days where 50, 60, 70% of the market gives you a 2 standard deviation advance. The best we've done on this bounce the last week or two is maybe about 10%. So we don't have that momentum surge, that urgency that often shows up coming off a low. And frankly, Sarah, we really haven't turned over the leadership here either. I would expect if we're really putting in a bear market bottom and a good durable low, we're going to have to see leadership turnover. And that just hasn't happened. I mean, your leadership here is still energy, it's still resources, it's still materials. So I think until you see some big leadership change,
led in
the
May.
status...
Financials had a 3% up move, communication services. I mean, there was a real bounce in some of those hard-hit areas.
But this is where I want to distinguish between bouncing in a bear market versus leadership. 80% of energy made a 52-week high this week. The bounces you're seeing in banks, the bounces you're seeing in tech are from very, very oversold conditions. Those aren't your leadership here. So I want to make that distinction in terms of what the signal the tape here is. When we look at bear market bounces, up 15% over about 2 months has historically been your typical bear market bounce. I think that's a reasonable framework here. It gets you to like 43, 43.50 on the S&P. There's a lot of resistance on top of us there. That's where I think this gets tricky.
Chris Verrone, good to get your technical take from Strategas.
Thank you.